Hey YouTube, welcome to the Subprime to Prime YouTube channel. Here, our focus is to get you from subprime to prime, and that all starts with knowing where you want to go on your financial journey. This is for information and educational purposes only and not intended to be financial or legal advice. And if you're new, welcome. Please hit the like and subscribe to hear more things about financial literacy. Alright, let's get into it. Now, in this video, we're going to talk about paying down your mortgage faster. Now, for a lot of people who own their home, paying down the mortgage is like one of the top financial goals that they may have. So I'm going to show you a few ways to reduce your overall mortgage, saving you a ton of interest over the life of your loan. So let's start off by making extra payments. Like if you make bi-weekly payments instead of monthly payments, and you make half of your mortgage payment every 2 weeks, this results in 26 half payments or 13 full payments per year, which can shave off a few years on your mortgage and save you a significant amount of interest. Now, you could do an extra principal payment and make additional payments, towards the principal balance of the loan, and even small additional amounts can make a huge difference over time. Now, with that, you can do this monthly, quarterly, or even just once a year, adding any extra money like a tax refund or a bonus from work or something like that, which works, just as well. And next you can refinance the loan to a shorter term. Like if you have a 30-year mortgage, you can refinance to a 15-year mortgage if you can support the payment. Now this will increase the payment, but it will significantly reduce the amount of interest, is what I'm trying to say, by doing that. I mean, knocking off, let's say you're 5 years into your mortgage and you try to refinance it for 15 years, you're already off cuff, knocked off, 10 years. So you do have the 15 years left, and then you don't have to pay 10 years extra interest. And even with the 15-year mortgage, if you can support making an additional payment or paying bi-weekly, however you want to do it, to try and reduce the overall interest that you're going to pay on the mortgage. Now, you can increase your payment amount and round up the payments. Let's say your mortgage is hovering about, let's say it's, $1,500. Well, you can round it up to $2,000, which will cut down, one, the time that you're paying on the loan, and two, get rid of a ton of interest. And I think that's the main point, because a house, you just to keep the math simple, a house, when you buy it at $100,000, isn't just $100,000. You have to consider that interest, which usually over the life of a loan doubles the amount that you originally were paying for the house. So you would end up paying $200,000+ over the life of the loan, instead of just the original $100,000 that was the purchase price. So that's what these kinds of repayment types are doing. It's just cutting down on that overall interest that you have to pay for the life of the loan. Now, you can do also what they call a recast of your mortgage. And then some lenders allow you to basically make a large lump sum payment towards the principal and then recalculate your monthly payment based on the reduced balance. Now, this can lower your monthly payment without changing your interest rate or term, but it still in the end reduces the overall amount of interest because you made it such a large principal payment. And that's if you come into a lump sum of money. There's probably other better things you could do with larger lump sums of money, like pay down other consumer debt or invest it, which is a fave, or add it to your emergency fund or savings for a specific event or experience or item that you've been looking to purchase. Now, budget adjustments. You kind of want to review and adjust your budget so that you can see if there's extra, monies that you can allocate to making the savings on saving on your mortgage by adding an extra payment here or there, and then automate it so that you make your mortgage payment like you normally do. Let's say you make it on the 1st. Well, by or before the 15th, you might want to make one more additional principal payment. And like we said, that overall it reduces the overall interest that you're paying over the life of the loan, and cuts down the years that you're paying that interest as well. And when you get down to it, if you can pay off your interest, the mortgage on your property, that much faster, you can now put that money to some other other use, like paying down high interest debt or emergency fund or investing or putting it into a cash whole life insurance and utilizing it just for some other purpose. But it brings that money back into your life, and it's not something you're worrying about, on a day-to-day. You own the home free and clear, and you can either get your next home, rent out this home. There's a myriad of things that you can do that will help along the financial path. So in conclusion, accelerating the mortgage payoff can be a powerful way to reduce interest costs overall and achieve financial freedom sooner. It really does help with that area. However, it is crucial to balance the goal with other financial priorities that you have, including the savings for retirement, building your emergency fund, investing, and paying off high interest debt that you have. And then always consider your financial situation and what you can and can't do with regards to that. So please give us a like and subscribe, and I invite you to our free platform on School, Subprime to Prime. It's our VIP platform where we talk about all things financial literacy and helping you go from subprime to prime. All right, till next time, we'll see you. Thank you.